want the knowledge that we've shared in the session today available to you, obviously, who are participating, but we'll be sharing this on our website under our sort of resources section, so people can sort of go back and listen and learn from these sessions. So I'll normally have a quick introduction of ATBN before we start. I mean, many of you who joined probably know us. This is like the agenda. Like we said, we're going to spend an hour and a half together. So we'll have a few intros. I'll do ATBN's, Katerina will do AfriConEU, and then we'll quickly go into Michelle Mboha's presentation. Michelle is in, sorry, one second. I had yeah, and I'm very, it's such a treat to have Michelle speaking to us today. One reason I'm really excited we're able to get her is she has both sides of the coin, right? So she has led an accelerator working with entrepreneurs, preparing them for investment readiness, and now she's on the investment deployment side. So really giving us the perspective of what can we do to better prepare entrepreneurs and startups within the African context. I don't think there's a better person we could get to really lead this session. So Michelle, thank you so much. And we're looking forward to that. So you're all in for a treat. And then I thought we would break out, we would have a few questions for Michelle, first of all, that to set us up for a short breakout group sessions, just to kind of absorb and sort of exchange a little bit about our experiences, come back and feedback from our groups. Michelle and a colleague, and actually Anthony, if you're still on at that point, I might pull you in. If we end up with 3 groups, we might need somebody who is a bit more knowledgeable on the investment process to kind of lead one group. So yeah, that's me putting you on the spot right there. And yeah, and then we'll close and we'll have some closing remarks and some feedback forms. Right, so ATBN, we are one of the AfriConEU partners. We are based in London. I'm originally from Uganda. And we are basically, we see ourselves as a support organization. Anything around supporting the growth of inclusive digital transformation in Africa, we want to be there. We do our work is around 3 pillars. One of our main focus areas is gender. So gender lens innovation, helping to increase the representation of women in the digital innovation ecosystem, and particularly making sure they have the right support and resources and investment to do that. Innovation ecosystem, so we do a lot of research around, you know, the ecosystem approach. How do we catalyze innovation ecosystem at an ecosystem level? And 3, we have that trans-continental pillar, because we are obviously based in London and working within African countries. We worked across, you know, Ghana, Nigeria, Uganda, Tanzania, Rwanda, and even more broadly in the region, you know, through partnerships. So that's kind of the way we see ourselves as supporting the Africa Digital Innovation story. And this is just a cross-section of partners. We've worked with many of whom are also part of the AfriConEU Consortium, and there you can also see some of the funders who funded our work in the last 6 years that we've been in existence. Right, so I'll hand over now to Katerina Reich from Porto Business School, who's going to give us a very quick, brief introduction to the AfriConEU project. I hope you had me do that little emphasis there, Katerina.
I will try. I know that we are already running a little bit out of time, but let me just share this. I do believe that you are seeing my screen now, so I will present briefly the AfriConEU project. That is a project funded by the Horizon 2020. And it's about the first trans-continental networking academy for African and European digital innovation hubs. So my name is Catarina Reis. I work at Porto Business School in Portugal. I'm project officer focused on funded projects. So please chat with me if you want to build a partnership or a project together. I would like just use in 5 minutes to go to www.menti.com and use this code for us to do a little and very short, I promise, ice-breaking questions. I will just give you some minutes for you to access. So I'd like to know where you are, because I do believe that we have here participants from Europe and from Africa, and of course from different countries in both continents. So I'd like to know where you are. You have to access menti.com and then use the code 32290383. Okay, so we have already some answers. Okay, don't be shy, just answer the questions. Maybe I will move to the next one because we have to do this quickly. What time is it where you are? Because we have also different time zones. Here is 11 in the morning in Portugal. Okay, at least 3 time zones we have. Lastly, how is the weather there? No, I'm sorry to hear that. Okay, at least one sunny day. Is this your first AfriConEU activity? This is just a yes or no question. And so moving to the AfriConEU project, we have a consortium of 11 entities, both from Europe and Africa. The AfriConEU project aspires to create, as I said before, the first trans-continental networking academy to support African and European digital innovation hubs in capacity building, knowledge sharing, networking, joint projects, co-creation, etc. Do you know what a digital innovation hub is? I do believe that all of you would know, but if we have here someone that is not quite aware. Okay. As we have here someone that doesn't know, I will share this short video.
I don't hear any sound. I don't know if that's just me.
You don't hear the
No.
video? Okay.
I think it's that thing where you have to tell Zoom to access something. I don't know.
Yes, I know. And what about now?
Still no.
No?
No.
Oh, that's too bad. The video is very interesting. But okay, doesn't matter. We will skip the video. The video was about the digital innovation hubs. It was a video produced by a non-governmental organization in Portugal. It's called COTEC. And the video explains that the digital innovation hub is really a regional multi-partner cooperation. So it's very focused on establishing partnerships and co-creation projects. They call one-stop shops, very focused on digital technologies. So the very goal is to access these partners to access the latest knowledge, expertise, and very focused on technology, enable them to piloting, testing, and experimenting these new digital technologies before getting into investment. And it's also a goal to provide support in business model development and financing. And financing is the topic that brings us here to this event, so it's very important. Our project has many phases. I'm not going into detail because we have to move on, but the main important phase is the development and implementation of this networking academy that has 2 main flagship programs. The first one is on capacity building and encompasses 12 local workshops, 20 webinars, and 8 masterclasses. This webinar, of course, is one of the 20 that we are going to organize under this capacity building flagship program. And then we have the second program that it's more focused on trans-continental partnership building and encompass 2 major events. One already happened in Bologna, Italy. The other one will be at the end of the project. And then we'll also have 4 design thinking bootcamps. But one of the main important things of the AfriConEU is that we aim to build this community encompassing several stakeholders from different backgrounds and different countries to build this sense of community and partnership building. I'm not going in detail also in this part, but the first capacity building program encompasses 4 main themes. One of them is the startups financial support, and that's the reason why we are here. And the other program also have 4 themes, and these activities that we are going to organize touch these 4 themes in much detail. A lot of activities had already happened, but a lot of them are still to happen. So please follow us on social media, LinkedIn, Instagram, etc., for you to be aware of all the activities that we are aiming to organize. Activities are free, however, you need to register. But if you are interested in activity that already happened, you can full access the previous events through our AfriConEU website. So I think this is all from my side. Thank you very much for listening. And now I give the floor to ATBN to the actual presentation.
Thank you so much, Katerina. That was fun and also very brief and to the point. Excellent. Thank you so much. And without further ado, I would like to invite our esteemed speaker today, Michelle Mboha. Michelle, I don't think I'll do justice if I do an intro, so I will let you introduce yourself. So please go ahead, share your screen, tell us a bit about yourself, and then feel free to dive into the presentation. Welcome, Michelle.
Thank you so much. I did not quite think the introduction you were going to do was going to do. I'm just going to start a little bit. My name is Michelle Mboha. I am an investment manager with Inua Capital. Inua Capital is a partner of INP, which is a French funder of funds. And we are one of their first funds that they have funded in Anglophone Africa. So they are very active in the Francophone space, and they have invested in 10 funds across Africa, Uganda being their first Anglophone fund. We are a $10 million gender lens fund, and we invest ticket sizes of between 100 to 500,000 in equity to Ugandan businesses. So just a little bit about who we are, just to know that we are an impact fund. We really look to do good alongside creating impact. And so that is something that's very important for us as Inua Capital. A little bit on me, my name is Michelle, like I mentioned. I have been in the investment space for a little close to a year right now. I have, as Eunice mentioned earlier, I have the somewhat unique experience of having started my career in the accelerator and incubator space and having made the move quite recently to the investment space. So I started with an accelerator program that was running incubator and accelerator programs across East Africa before moving on to Growth Africa, which ran accelerator programs across 7 countries in Africa, eventually leading the offices in Uganda and running the program locally in Uganda, which is where I happened to meet Eunice. I'm very excited to be here. I think it's an exciting time for entrepreneurs in Uganda and in Africa within this space. There's a lot of activity happening within the local space. So I'm very excited to just be here to share a little bit about what parts of that process you could tap into that could support you as people running accelerator programs, incubator hubs, or as entrepreneurs to be able to access the capital that's flowing into the Ugandan ecosystem. With me today, I will not put her on blast. I have a colleague of mine called Caroline. She'll take part a little bit later in the breakout sessions, but she's also very excited to be here. I know I will not necessarily put her on blast, but Caroline is part of the Inua Capital team and has been part of the team from day one. I'll jump right into my presentation today. And I think I just wanted to start a little bit by breaking down private equity and what private equity is. And the reason I thought it was very important to start here is because one, there's a lot of confusion generally on what private equity is. And so we meet quite often in our journey, we meet a lot of entrepreneurs who don't quite understand the concept of private equity, how it works, what we are not. And I thought it was really good for us to have a common understanding. And just very quickly, we are an alternative to traditional finance. Traditional finance being your microfinance institutions, your credit organizations, savings and credit organizations, your traditional banks. That is what is typically considered traditional finance. And we are an alternative to that. We typically use private funds to invest in private businesses. And ideally, what happens within the private equity space is an investor will buy a stake in a company, in a private company. So this is a company that's not listed on the stock exchange. So that could be the Uganda Stock Exchange, the Nairobi Stock Exchange, the London Stock Exchange. And we buy this stake with the hope of ultimately realizing an increase in value in that stake, selling that stake for significantly more than what we paid for it at some time in the future. Because we take an equity stake in the businesses as private equity investors, we share in both the wins and the losses with other business owners. And we also ultimately play a very active role in leadership and governance of the companies in which we invest in. There's so much more to what private equity is, but I thought this was just a very good snapshot for us to all be on the same page. Today, I really want to talk a little bit about the phases of investment, and I want to approach this from an angle that's going to leave everybody here a little bit in a better position when it comes to approaching an investor and actually being successful in the fundraising process. A lot of times we are not successful in fundraising, not because we are not good businesses, but because the approach is off, or you're missing just a few things here and there, and I'd really want to touch a little bit on that. So the typical investments process is going to start with you asking yourself, what type of investor is right for my business? There are all types of investors out there. It could be a traditional finance, that could be a bank. It could be players within the private equity space, and it could be grant players as well. I operate in the private equity space, which is commercial capital, which basically means we are unlike grants, which grants will not necessarily be commercial. This simply means in a grant space, there's really generally no expectation of return on the capital that is given. And so quite often you'll hear people say it's free money. It's not free money. It comes with terms and conditions, but it does not have the same expectations that commercial capital has. So as private equity players, we exist in the side of the commercial capital. And I think that's usually the first place that's quite important for anyone who's seeking funding to start with. Who's the right investor for my business? It's important to look at this in four pillars. The first is usually, what stage of business are you? What's the values alignment you have with the different investors out there? What's the investment strategy or criteria of the funders that you're approaching? And what additional value do these investors have? I'll quickly touch on this because this is a very perfect image I got from the Global Impact Investment Network that tries to summarize the different types of investment. And so I'm sure you've had people say, I'm raising Series A, I'm raising Series B, I'm raising venture capital. And it seems to be very confused as to what is Series A, what is seed investing, what's angel investing. And I think this chart really summarizes it perfectly for everybody. I think fundamentally investment can have any type of name. It could be seed, venture, private equity, buyouts. But at the end of the day, it all comes down to the stage of the business that you're in. And those stages could either be you're in an early stage as a business. This is usually the stage at which you still are figuring out your business model, your minimum viable product. And there's funding typically that goes in that stage that's called either seed or venture capital funding. You could be in a growth stage or an expansion stage. And typically, the type of funding that goes in this area is usually called growth or expansion private equity, or you could be in a maturity stage, and that would be buyout private equity. Fundamentally, the one thing for all of us to remember, all of this is private equity. Whether it's venture capital, whether it's seed investing, whether it's private equity, growth equity, we are all, at the end of the day, private equity, because we are taking capital from private players and investing in private businesses. What makes the difference usually is the stage of the business. And that's what makes the difference between somebody being a venture capital investor or a growth expansion or a growth or expansion investor or a maturity investor. But fundamentally, all of us at the end of the day, we are all private equity players. And I thought it was very important for us to really know that and understand that. Now, I'll talk a little bit about, I'll dwell a little bit more on early stage investing, because I thought most of us are in this stage. And when I gave a quick survey of the types of businesses expected, most of us are in a pretty early stage. So I want to dwell a little bit more on what this means. Now, early stage investing is typically people who are going to invest at the onset of an organization, at the onset of a business. Typically, these are people who are looking at very risky businesses. And the reason why this is a very risky business is because in most cases, you're either still at an idea stage, or you are yet to develop an MVP, a minimum viable product. Or if you have a minimum viable product, you are still trying to ask yourself, is there product market fit? Is there a market for my product, a sustainable and repeated market? And what's the business model that's going to make sense for me? Investors at this stage are typically seed and venture capital investors. These are typically your, what we call the friends, family, and fools, angel investors, seed investors, venture capital investors. And at this stage as an investor, we are really looking to show that there's a need your business addresses. And we want to see that the need is large enough to justify an investment. We are very high risk at this point, but that ultimately means we also seek extremely high returns to justify risk. What does this mean in reality? This simply means at this point, you still cannot prove that you can take your product or your service to the market in a very cost-efficient way, in a way that makes money. And so I'll give a very concrete example of quite often the general is a company like Uber. Uber is yet to actually take its product to market in a way that makes sense, in a way that is profitable. And so quite often you find, as much as Uber is a significantly large organization generating millions in revenue every year, because they're still not profitable, because they are still not generating more revenue than the costs that they incur as a business, they are still very much a venture capital investment, because they are yet to figure out, how can I earn from all the users on my platform in a way that at the end of the day, there's profit left for me in my business, and there's profit left for my shareholders and the investors in my business to share after I have covered all my costs in my business. These types of investors are there, and there are plenty. They are called venture capital or angel or seed investors. And if this is the stage your business in, it's usually best to approach such types of investors who are very clear on the type of criteria that they're looking for. Our expansion or growth investing, which is a place that Inua Capital plays in, and also a place where quite a number of players still play in, is the next stage of investing. At a point where a business has figured out its product, has figured out its MVP, has figured out a business model that they can take to market, deliver the product or the service to market, and still retain a profit, quite often now they face the challenge of, now I want to replicate this. I want to reach as many customers as possible now that I know I can efficiently take my product or my service to the market. And that's usually where growth or expansion capital comes in. We, as much as we are risk takers, we usually take a much lower risk profile than a typical venture capital investor, because we are working with a little bit more established businesses. And I just want to remind at the back of your head, established is not a matter of the years you have been operating. Uber has been in operation for 10 plus years. They are still very much a venture capital investment. You could reach a business model that makes sense within your first 2 years of operation. And so you need to start looking at investors from that perspective. So we'll typically work with well-defined business models, a clear go-to-market strategy, and we are going to invest in you replicating your business model. We will take ownership in the business as well, but in comparison to the venture capitalists who take a much higher risk, we have a slightly lower return expectation than venture capitalists and early stage investors. Those are not the only things I think you should consider when looking at what type of investment is right for you. I think very quickly, it's very important to look at your alignment in terms of values with whichever investor you approach, and know that investment is like a marriage. A typical venture private equity investment lasts an average of 5 to 7 years. So you're going to be, for lack of a better word, stuck with this investor for at least 5 to 7 years. And so you have to go in knowing, does this investor have values that reflect mine, that mirror mine at the end of the day? Are my goals and the goals of my investor aligned at the end of the day? There's nothing worse than taking money that you come to regret later on. And so that's something that you have to be very clear on. What are my non-negotiables? It's also very important to do in-depth research on the different funds that you're looking at. Each private equity fund has a defined strategy. It's usually public information that we look at. I'll give 2 very clear examples. One of the strongest strategies for the MasterCard Foundation is job creation. And so it saves you time and effort as an entrepreneur, as an incubator, as a hub, as a support organization, to have a very clear understanding of where are the investors whose strategy align with the types of businesses I work with the type of business I am. If I know MasterCard Foundation is all about job creation, is all about youth employment, am I aligned with them? Because this makes it so much easier for you to get a yes or no, or to be within their radar. Inua Capital is a gender lens investor with an emphasis on local ownership. And so for us, we are very keen on businesses that have a gender angle to them. And so I think for every investor that's out there, they're very clear on what their criteria is, what their strategy is. And I think it's very important for you to know who this is before you approach a particular investor. And finally, it's also important to know what additional support these funders are able to give. Money is very important, but what else are you getting in addition to money? In terms of strategic support, you need to look out for investors who can complement, and it's the best, in your best interest, to actually ask different investors, what else do you bring to the table other than money in terms of strategic support, in terms of networks and connections? What else are they willing to bring to the table for you as an entrepreneur? So just very quickly, that in summary is some of the things that I think as an entrepreneur or an entrepreneur support organization, you should be thinking about every time you approach an investor. And just for you to have a very clear sense of what the investment process looks like. A typical investment process will vary slightly from company to company, but I think having an understanding of what this process looks like helps you to better prepare yourself as an entrepreneur, but also to prepare your the people within your network if you're an entrepreneur support organization. Our typical process is going to start at an identification. And so we source companies from different sources, through partner networks, through organizations online. And so as an entrepreneur, the where I'd usually start is be part of these networks, belong to people who engage with investors, identify who are the players in your space, the ecosystem builders and networks in your place, because quite often we source a lot of our entrepreneurs from these particular networks. So you need to know who the Global Investment Network are. You need to know ATBN. You need to know Outbox. Who are all these different players in the ecosystem? Be part of them. That's usually where we find these people. Once we've identified, we usually have a due diligence process that goes anything from 3 to 6 months. And that is really us just verifying this business from a legal place, from a financial place, from a commercial, a technical, and ESG and gender place. So I think as an entrepreneur, it's very, very important for you to have your documents and your systems in place. Quite often we will meet entrepreneurs where these are not in place. And all this does is lengthen the fundraising process for you as an entrepreneur. So if you take one thing from me today, when you go back today, make sure from a legal perspective, your books are checked. From a financial perspective, and it does not take a lot. Do you keep records? How do you keep records? How do you account for money? Do you sign contracts with employees and service providers? What does that look like? Just make sure all these boxes are ticked, because it makes our process significantly easier for us. We'll also usually do things around the commercial and the technical due diligence, just to understand the market viability of this, and also things around gender and ESG, which is the environmental, the social, and the governance of the company. These are areas we quite often find lacking in a lot of companies, and they tend to lengthen an investment process for a particular entrepreneur. So if there's one thing you could take from today, your books really have to be in check. And it might seem very frustrating in the beginning, but there's a reason, there's a method to the madness. There's a reason it's important for you to keep your books and do all of this. Usually once we've concluded in due diligence, we'll go through an investment process where we're setting the terms and the conditions, and active ownership, where we're actually engaging in the day-to-day ownership, management and leadership of the business. And we tend to want to exit businesses anytime between 5 to 7 years. So that really is just a wrap up of what our process looks like. I've tried to keep within the 20 minutes I was given. I think this is just the beginning of what to look out for, what to be careful about. But I'll stop here, so maybe I could give you guys a little bit more time to ask me some questions.
Amazing. Thank you so much, Michelle. I think a lot of what you said was, it was really good, because it applies whether as a digital hub leader, when you're thinking about preparing startups to raise investment, but also applied even as hubs, right? Where we get our funding, for example, particularly when you are talking about, values aligning, not all money is the right money for you. And I do welcome anyone to ask questions, as maybe Adiza, now is the time to be organizing people. I think we probably should split up into 3 groups. But as we prepare the groups, and please feel free to chip in with your questions. You could type your question in chat, or feel free to unmute yourself and ask Michelle a question. I already see a hand from Kiko. But I wanted to ask you to kick off with my question, Michelle, which is, it's so important, that point you made around finding the right money, right? About it not always just being about money, but within the African context, where, I don't know if this, maybe I'm wrong, but there's the perception where, maybe the money is a bit scarce. So, if you get the money, how would you turn down money when you're, a startup in the ecosystem? But I guess to kind of emphasize the point that sometimes it's really not worth it, I just wondered if you have any war stories, of course, without giving away any names or any details of where that's gone wrong, like you've, sort of seen a lot of these investments happen, obviously, as you were supporting entrepreneurs, just to give an idea of what can go wrong when that's not aligned, because I think that will stick in our minds, that when we are in those positions, and even though there is those financial pressures, to make sure that we make that right choice. Do you have anything that you can share? I know I'm putting you a bit on the spot.
Yeah. So without giving so much away, definitely I would say when you get, So there's two things that can happen. There's one which quite often we see is you get money and then the funder pushes their agenda down on you. So maybe you set up your business to do one thing, but because the funder is willing to fund you, and quite often it's a big ticket size, so it's money that perhaps your business was not even ready to absorb. As a rule of thumb, we'll generally say, try not to take more funding than your annual turnover. Because, so for example, if you make $100,000 in turnover, you try and keep your funding within that as you scale. That's just a general rule of thumb, because you don't want to find yourself in a position where, should you have to pay back, your annual turnover is not even able to pay back. And so quite often you find yourself either taking more money than you needed, which I have seen happen in Uganda quite a number of times, and you are forced to change your strategy. And so I'm sure if you look within the ecosystem, you'll see a number of startups that have raised big sums of late that are changing from what their business model initially was. And that puts you in a position as a funder where if you were very passionate about why you started your business, being forced to fundamentally change your business model could be something that works against you. I've also seen cases where you actually lose ownership of your business because the funding came with certain goals and milestones that from the get-go was set against you, were goals that you would never be able to achieve. But because the money was there in that moment, you take the money without remembering that there's a very real consequence to you not hitting those milestones. And sometimes those consequences could be you lose ownership of your business. And so you are diluted to a point you are no longer a majority shareholder, or you have such an insignificant shareholding that you generally no longer have control over this business, which I'd imagine if the reason you started your business is to be able to make a change, being kicked out of your business is something I would not want you to see happen.
Kiko, you have a question, please feel free to unmute. And I know you did a quick intro in the chat, but if you could give one sentence introduction and then ask your question.
Yeah, so thank you very much, Eunice. So I'm Kiko from Tanzania. Yeah, my question, I have three questions. So you can, I don't know if you can answer all of them, but the first question is with respect to exit mechanism. You said you're looking for exit. So what exit options are you preferring? Is it IPO or buyout, or do you take revenue-based, revenue sharing agreements? So that's my first question. My other question is with respect to due diligence. When the items you mentioned, one of which was commercial, so I wanted to understand more, what did you mean actually by commercial in the items in the due diligence? And my last question, with respect the role you are playing other than investing in the ecosystem, understanding the Uganda ecosystem is still at the very early stage. So as an investor, you're depending on the pipeline of deal flows to come from the ecosystem. So what do you do in your part as investor to support the development of the ecosystem, the local ecosystem? Especially, you mentioned that you're dealing with gender and local investors. So what do you do in the local ecosystem to develop the ecosystem? Thank you.
Thank you so much for that. So I'll just go quickly through that. Exit is all about how you structure. In Uganda, actually, generally in Africa, IPOs are not common. I think we've only had 2 IPOs in Uganda in the last 10 plus years, which is QCLL and MTN very recently. So IPOs are usually very far and few in between. So understanding that is the ecosystem that we operate in, we usually structure going in. And so it could be, a structure is a case by case. So it could be a revenue share, for example. It could be, we allow for a buyback of the shares we take. So we say we take 20% of your shares at 100,000, and we will write within our contract in 5 years' time. The majority shareholders can buy back the 20% at 100,000 plus a pre-agreed on interest rate that we are happy about. It could also be we exit to larger players. Say we grow a company, as you know, we understand we can only go up to 500,000 in funding. Perhaps a company grows to a point where they need significantly more than that, 2 million, 2.5, we could exit our share to subsequent investors who are able to take on bigger ticket sizes. We could also exit in terms of strategic exit. So maybe we buy a juice production company, we grow them to a point where Coca-Cola is interested in them, and Coca-Cola buys out that company. So there's very many ways we can exit, and we try as much as possible to structure before we enter an agreement, just to know what that would look like. Commercial DD is a little bit more of an internal thing. Here, what we are looking at is the viability from a commercial perspective. So we are trying to quantify the market and see realistically how much of this market can this business capture. So that usually is an internal thing, and it plays a lot to why the due diligence process takes long, because we can spend anywhere between 6 months to 18 months before we actually disperse funds to a business. And it's usually quite important for entrepreneurs to understand that, because A, you need to plan for that. You need to plan that if you approach me today, I will not write a ticket tomorrow. So how are you going to sustain yourself in the interim as a business? Ecosystem development, yes, we are being very intentional about that as Inua. I think we have made it a point to go outside the usual ecosystem. We have made it a point to look for businesses outside the usual. And I think we find everyday utilities that we're using in supermarkets. When we travel to different parts of the country, we are constantly on the lookout for that. We're also very intentional within our pipeline, especially on the gender angle, to make sure at least 30% of our portfolio is women-owned businesses. So this is something that we are constantly engaging on, asking entrepreneurs. Every entrepreneur knows another entrepreneur. I'm sure if I asked you right now, do you know another entrepreneur? You could give me 2 or 3 entrepreneurs, and continuously building a pipeline that way. So it's not just the people who are in the usual places, but even when we find somebody who maybe we found their product in a supermarket, when we do meet with them, we're going to ask them, who else do you know that's an entrepreneur, and continuously build our network that way.
Thank you for your question, Kiko, and thank you for your answers, Michelle. Adisa, just to confirm, we have the groups ready to go?
Yeah.
Okay, so we're going to break out into groups. The reasons for this is for us to continue that discussion. So usually when we're in a big group like this, maybe not everyone is going to be able to ask that question. So we're going to break up in 3 groups. Michelle will be in one group. Her colleague Caroline will be in another. So it's just to continue this discussion. Think about where are you in your, introduce yourself. Think about where are you in your journey around understanding the investment process. Maybe you're a hub leader, maybe you're a startup. Just react to Michelle's presentation. What has been your key takeaway? Where, again, understanding where you are in your journey and any questions you might have. So it's really for us to have a smaller discussion, and then we'll come back. In the 3rd group, we'll have Anthony, who's volunteered to sort of facilitate the discussion there. He's also kind of been in the UK Africa investment space, so quite knowledgeable on this, and we'll be able to respond to any questions. And then when we'll take 15 minutes, and when we come back, we'll just sort of ask, the facilitators in that group to kind of report back, maybe what were some of the big questions or key questions in general, where are people in the journey, so we can kind of know what happened in each group. Again, I hope that all makes sense. It's not like a fixed discussion, but just to kind of, allow a space for more voices to be heard and for us to kind of speak a bit more. So Adisa, take us away, and then we will be back. If we leave now, we are coming back at, it's at 12:05. I hope I got that right.
Can anyone hear me? So my name is Caroline Wamanga. I hope everyone can hear me. My name is Caroline Wamanga. I work as an investment analyst for Inua Capital. If anyone has any questions concerning Michelle's presentation, the questions are very welcome. No takers?
Question for me.
Yes, please, go ahead.
I just said that I have no question. I mean, it was pretty straightforward. It was covered.
Yes.
So, no questions from my side.
Okay. Maybe we could do a round of introducing ourselves and what we do.
Okay, so I'll start. My name is Konstantinos. I am from Greece. I work with Stimuli for Social Change as a partner at the AfriConEU program. My work with the project is to design and develop all the evaluation tools. So not very related to investors and all these things, these nice things you're talking about.
Okay.
But yeah, I found this pretty interesting and fascinating. So glad to be here.
Okay. Anyone else? I see a Benjamin. Hello? Hello? Okay, let's go to Francis. Hello?
Can anybody hear me?
Yes. Praise?
Okay, good afternoon. Yes, my name is Praise. So I'm a legal practitioner. I found the session quite interesting and very expository. I'm just trying to get into the space of how investments work, and all of that. So I currently will work for a startup as well, and we'll be already getting into the talks of getting investments, getting investors, and all of that. So I just saw this as an opportunity for me to learn so much more. And so, like I mentioned, the session by Michelle was quite expository. I have a question though. I think it was asked during the general session, but I got locked out of the call, so I didn't get the answer to that question. I think Kiko asked. It was more explanation regarding the commercial point under due diligence that's expected of a company. Can I get like more insight into that? Like what constitutes the commercial due diligence that a startup is supposed to make sure to do? So
okay, concerning due diligence is okay, it's quite let me say it's quite a wide concept in my book, because it includes a lot of areas we cover. I think being a lawyer, you've heard of the legal due diligence, which is usually outsourced to the lawyers. There is financial due diligence that brings in auditors and other accounting professionals. And then we come to commercial due diligence, which you want to know about. So, so this is the process in which the person who's looking at the business, in this case, me, the investor, is when I analyze my target company from a commercial perspective. So what I mean by this, I'm looking at the company in the context of, number one, what's its positioning in the market? Is it, does it have, let me say, more than 50% of the market, or is it number 5 in the list of positioning in the market? At that point, if you've noticed, I've already brought in the competition. I'm looking at the competitors in the market. I'm looking at the reception of the product or the service in the market. It's quite a wide concept. So it's quite very vague, and we've found over time, being as a team of 3, we've usually found that we actually usually have to outsource this work to a consultant. So let me make it more applicable. We've done IRPs, our investment readiness programs, and in the investment readiness programs, when we usually find companies sometimes and they are too young and they don't qualify for our investments. So we go through a process of making the company investment ready. So we pass it through an investment readiness program. So, and one of the areas in which we try to do some due diligence is the commercial due diligence. So we found that work is usually, we're a really small team. And let me say, like at the start of the year, we were only 2 in the team. It was me and the managing partner. So since, as I've mentioned before, commercial due diligence is really a wide concept, we found ourselves having to bring in a consultant to do this. So it was a packaging company. I'm just going to give you this example without giving details to make it more applicable. It was a packaging company. So as we're doing due diligence, basically the job of the consultant was, number 1, find out what is the actual market, number 1, market size, okay? He had to map out the market size, segment the customers, okay? Find out who the competitors are. So this was going to help us basically design a marketing plan and strategy for what? For the company. So he goes out there, as you would imagine, off the top of your head, who are the customers of a packaging company? This is a list he came up with, and some honestly I never thought of. Basically, the company makes what? Non-woven bags and paper bags. So off the top of your head, I think you can imagine what the market is going to look like. But we wanted him to do like specifically, what is this market looking like within the central business district of what? Of Kampala. So he mapped out for us the specific restaurants. Then based on he also went and did interviews with the current clientele of the customer, got a sense, number 1, of their needs, okay? What on let me say on an annual basis they actually need from the company, and what they would like to see the company doing that they are not currently doing. He quantified that. Then he goes out into the market, gets similar, let me say, similar type restaurants, similar type pharmacies, similar type cafes. So he basically mapped out the market in the potential market in the central business district, quantified what their potential orders would be, because this was also going to help in our financial modeling. It was going to spill into our financial modeling. You get the addressable market, then you target maybe in your financial forecasting, you're going to look at getting maybe like within the next 2-3 years, like 3% of that. So it's a really wide concept. So basically, you're just looking at the commercial perspective of the company. Its positioning in the market, like I've mentioned, what its market looks like, what its prospects are going to look like in the coming years. I hope you've got me and I'm not being so vague with the example of the packaging company. I hope I've tried to answer it. Praise?
Yes, you have. Yes, you have.
It's clear?
Yeah.
If
It's
anyone
all
doesn't
okay.
understand, I can, okay, fine. Any other questions? Francis, you've not introduced yourself. I see Benjamin has not introduced himself. If we could hear from you guys.
Hello, please, can you hear me?
Yes, Benjamin, we can hear you.
Yeah. My name is Benjamin, and I'm with Abjal Communications. And
Okay.
my place is a bit noisy, that's why it's raining here.
Sorry about that.
Yeah.
So do you have any questions for me, or was Michelle's explanation quite clear?
Yeah, it's quite okay. I understood quite a lot of the things that she brought out. Some are novel, though.
Pardon?
I was saying some are novel to me. I got enlightened because some of them, they are new ideas. I'd have to take into consideration.
Okay, do you have any specific questions concerning those new ideas? Or like me, usually when I come across new ideas during verbal presentations, I go and do research by myself, but there are some people who have their questions on hand there and then.
I don't have any questions for now. It's fine.
Okay, Francis?
Hello.
Yes, Francis, nice to meet you.
Nice meeting you too. I was in a car, so the place was very noisy, so I sent a message through the chat. But I'm
Okay.
Francis Kwesi from Sunset Bags. We make reusable bags to make sure people use eco-friendly bags using eco-friendly materials and other waste material that should have ended up in waste or the landfills. So that is what basically we do. Yeah.
Okay.
I was in a bus, so I couldn't. The network was not very good on my side.
It's okay.
So I couldn't really capture a lot of the information. But the little that I captured, I think it is an eye opener for me in terms of investment. Thank you.
Okay. If you don't mind, I hope this is not too intrusive. You said you have a company that makes bags.
Yes, please.
Hello, Francis. Yes. Which stage
Yeah,
do
we
you
make
think
bags.
your company is at?
For now, we are at the startup stage. We are the start. Initially, I didn't join the webinar earlier on, so some of the things I couldn't capture. But for now, we basically producing on the basis of what comes into the company and plowing back profit and other things. So we now seek for investment from other areas, like programs that are also ready to support startups and businesses.
Okay, do we have everybody back? Cool. So we, in our group, I think we mainly had one startup entrepreneur, and we kind of focused our discussion around supporting them, who is actually fundraising. So I think that was the main discussion. I don't want to, Sebastian, maybe you can say what your learning was from the discussion in terms of if it helped you identify some of the challenges you are having. But I guess to summarize for the rest of the group, Sebastian runs an e-mobility startup in Kenya, and they're trying to raise their first round of funding. But a big challenge they have is that they are trying to they need to prove that their e-mobility is going to actually lead to, let's say, carbon savings, and there's a technology around that, blockchain, deep tech, that's needed to show that proof. And they don't have, obviously, the investment to invest in that technology. They have the e-mobility cycles, those are their product, but they'll need this additional technology to be able to sort of show the investors what they want to show. So he's in that conundrum where you need money to build the technology and you need the technology to raise the money. And so, yeah, so we spent, Anthony was leading our group and was sort of responding to that. So I wanted to hand the floor over maybe to Sebastian and say, again, if I've summarized your problem well, but also if that the discussion that we had in the breakout sort of gave you any more tips that you can take away for your fundraising process going forward. Sebastian, would you like to say anything?
Yes, Eunice, thank you. That was a very good discussion with Anthony, and also the main takeaway on how we can be able to play aloud within the development or getting a company so that we can be able to fundraise and then to be able to scale. Basically, we had considered maybe pre-accreditation carbon offsetting. We had thought of in that area. So basically, that was a good takeaway from the group. So thank you very much.
I think maybe I'll just add a little bit to this, Sebastian. I don't know if you're in any programs around e-mobility, because I know e-mobility has picked a lot of interest of late. And so for me, I'd also say the R&D business. This I'm trying to remember the name of the program itself, but if you could Google Borderwork and Zembo, they have been in a very similar program. And so they were able to get some sort of grant funding to go into that. And so for me, to any entrepreneur, that's usually what I'll say. Who else is in your ecosystem? Are they getting funding? Go to those places, because quite often, if you find sector-specific funders, they look to fund products, projects, businesses in similar sectors. So find out who else is operating in your ecosystem or adjacent to your ecosystem. Who are they talking to? What are they doing? And plug and play into some of those ecosystems.
Yeah,
Thank
and
you.
there was also another point that Anthony, I think, also raised and said, you know, in terms of, in general, if you need to prove something to investors and it's going to require a big investment, think about what other open source tools or sort of a little MVP that you can use to demonstrate that, because what they want is not necessarily for you to have the full thing. I mean, I think they will understand that you need investment to do that, but to kind of look out for what other ways that can be demonstrated. I think a lot of the time MVPs can be done with existing tools or even offline. So that was good. And Michelle, the response you've just given also touches on another point that Sebastian raised, where the structure that you're incorporated as. So I think, Sebastian, you were saying you're incorporated as a limited by guarantee, which means you can't give out equity, which now means you're having conversations about, do you have to register another entity? But then you were saying maybe, especially if there's free grant money that can help you do the R&D, maybe actually being a limited by guarantee might be an advantage. So Michelle, talk a bit about the structure of your organization and at which point you start to change yourself and your structure to try and align for maybe certain money or not.
Yeah. So I think if you are going to take on commercial capital, being limited by guarantee would fundamentally impact you. What I would advise in such cases is you could have a commercial arm, so you can still keep the limited by guarantee for the maybe the group company, and then you would have a commercial arm, because private equity takes equity. So it's very hard for us to work with a structure that does not show any way in which we can safeguard our funding at the end of the day. So I'll look into maybe having a for-profit arm. And I think even if you look at, I think in Kenya, Synergy has done that very well. They are limited by guarantee, and then they have a for-profit arm that takes in all their investments and then deploys the investments accordingly to the different.
was it from our group. Unless there's, should we move on to, should we give Caroline, how was it in your group? Do you want to report back or give the floor to any of your participants?
Unfortunately for my group, everyone seems to have understood Michelle's presentation pretty well. They were pretty is it the word not curious or uncurious? I'm not reporting them, by the way. So unfortunately, we were now talking to Francis, but he had been delayed because he was in transit. But ideally, I was starting just to get into his business. I think he was the only entrepreneur in the group. So he runs a packaging business, and honestly, that is when the breakout session ended. So we were hoping to go more into his business and discuss issues around basically the stage at which his business is, and if at all is looking for funding and the like. So unfortunately, mine was quite and there were no major events that took place.
No major trip.
Yes.
Michelle?
And
sorry, go on, Caroline.
Yeah, so maybe the only thing I think it was praise. She raised a question around understanding more about commercial due diligence, and that is what I took on and what basically I discussed in the group.
Okay, so what is the clearer idea on commercial due diligence, or was that already covered by Michelle, you think?
I think Caroline should take that, because I got that question done significantly more commercial DD than I have.
So I find it easier when when giving explanations for what I consider vague concepts like that. So basically, what I did in the group, I gave an example of commercial due diligence we had done for a packaging company at the beginning of that. I think Michelle, before you joined us, I think you've read some of that paperwork, and I took, this is what basically what due diligence, according to me, is looking at the company from a commercial perspective. And what I mean by that, you're looking at the overall context of the company based on its positioning in the markets and how likely it's to evolve in the years ahead. So I gave the example of the packaging company, and as I explained to them, it's quite a wide concept. So you have to sit down, draw out a plan of what you want to accomplish. So considering we're only a team of 2, we hired a consultant, and what we wanted him, number one, was to concretize a market. What is the quantifiable market for this for this company? Number one, identify customers, quantify these customers in terms of orders, segment them into their different market segments. What types of products are they? Because it's a packaging company. It's doing both non-woven and paper packaging. So quantify the orders, number one, for each customer segment. So he had to go granular, number one, within the central business district of Kampala. So what I explained to them is that included, number one, starting from within the company, finding out what customers does the entrepreneur or the company actually serve, and what orders do they take on an annual basis? What do they need? What does a typical restaurant need? What does a typical grain miller need? What does a typical cafe need? What does a hotel need? Just internally from the customers she already had. So that involved talking to them, then going that and applying that on a broader basis within the central business district of Kampala. So he had to quantify that at the end of the day. He came up with, I don't know, I'll call it a database, and he presented it to us, and it's like, okay, as part of the commercial due diligence, this is your market potential within central business district of Kampala. Then he also looked at competitors. He did profiles on them, what potential issues we could face from them, or he had to map out as in who's your competition, are they a threat, what segment of the market are they focused on? What products do they give out to the market? Are they better than you? Can you do better? Can you offer better? Or basically, that's what commercial due diligence is, at least for me, in my experience, and what we did with that company. So our goal at the end of the day, that was going to feed number one into us coming up with a strategy for the company, for the company. Then also it was also going to feed into the forecasts we were doing, the financial forecasts we're doing. We're like, okay, fine, this year if you're making let me say $100,000, and we've said that the potential market available is around $4 million, how much of that market is okay, how much of that market do you potentially see you can target and get? And then following that, you have to lay out a strategy. Okay, fine, we're going to talk to these supermarkets, we're going to talk to these, this is a time period, you're going to do this. And concerning that, do you have enough manpower to do it? Do you need high-level salespeople, or is this going to be the CEO's job, or can anyone just do it? You understand? So basically, commercial due diligence just feeds into those granular things to make out a marketing strategy, feed into the financial forecast, and feed into the overall strategy for the company. I hope that's a bit clear and I've not made it worse.
No, I think it's clear, but also I think it's going to show, I think is Inua Capital a much more hands-on investor than the typical, because I think a lot of that normally is like, they want you to have those answers, like they want you to give them the answers to all of those questions, right? As the startup, which you may not necessarily have. So I think it's really encouraging to know that there is investors out there that are going to walk that journey with you and sort of figure those things out. But I'm just looking at the time. Michelle, do you want to sort of summarize from the discussion from your group, any sort of key points, like questions that were raised that led you to maybe emphasize a certain point that could be of benefit to the broader group?
Yeah, I think for me, just very quickly, it was on the common mistakes that we see. And this is a mistake I've seen both on the accelerator side, and now that I'm on the investor side, it seems almost amplified. And I think, please do not present alternative facts when you're dealing with an investor. I think it's very, very important for you to be able to back up everything you submit. You might try and alter the data to interest me, but as an investor, I have time. I'm going to do 4 deals a year, and trust me, I am going to actually spend a lot of time backtracking and fact-checking any data you give me. So please, as an entrepreneur, this is whether you're dealing with Inua or any other investor, make sure that you are not stretching the truth. We see it quite often. You need to be able to back up everything. And I think maybe the last one that came up that I'd want people to think about as you scale, as you take on Gov Board of Advisors, be very careful with politically exposed persons, because most investment funds are very wary of companies that have a very strong presence of politically exposed persons. We'll define politically exposed persons, and you can have a whole session on what that is. But generally, you want to avoid having people within your organization, within your influence, people who have very strong ties to the government and to politics, because as an investor, we worry that could put your business at risk. And so once we find you have a lot of politically exposed people, either at shareholder level or at governance level, it makes us very wary as an entrepreneur. You know, for a lot of young entrepreneurs, you might be excited to have somebody who's politically known, and that could seem like, oh yes, we have this MP or this politician on our board, but you have to weigh those options very, very careful as you make those decisions. Are they really adding you significant value that it's worth having them within your organization? Because in the long run, it could actually play negatively against you.
Those are some really good points. And particularly when you're talking about the first one of stretching the truth, I just wanted to say, wouldn't it be better, you know, in those cases to say, we don't know, we don't have those numbers, or we haven't yet, you know, you'd rather say that and then maybe get the support to do that, right?
Definitely it's better, but please have your finances. I've for me, it's a very big turnoff if, as the CEO, you cannot tell me, because especially as a startup, you are struggling to make ends meet. So for me, if you cannot tell me how much money you made last year, or okay, January, what did, like last month, so as much as where you don't know, just you'd rather say we don't have those numbers, but try and have some of these numbers on your fingertips, especially numbers around your finances.
Yeah.
Just try and have the basics on your fingertips.
Yeah. Excellent. We are out of time, but unless there's any burning last question for Michelle, does anyone have any last burning question? We could probably take a quick one. If not, please join me in thanking Michelle so much. I thought that was really insightful. I've learned a lot as well. Thank you, Caroline, as well, for the mini MBA on due diligence. I think I'll have to also go back and like listen to the recording and take notes on that. I thought that was really, really good. And also, I guess, like I said, really encouraging to see investors like who put that much time into sort of helping the entrepreneurs as well to sort of figure out their commercial offering and where they are in the market. I would like to ask us to turn on our cameras. We have our culture here as part of the AfriConEU that we take a family photo at the end of these. Sometimes we start to see people again as we go through the month coming for different sessions. So it's always nice for us to turn on our cameras and have a family photo. So if you're able to, I know not everyone is able to, but it would be nice to see your faces from wherever you are, you're joining from around the world. And Georgia, are you going to take this? Any more cameras? We only have a few more. There we go, Sebastian. Good to see you. Patience. All right. I think when we have 2 rows, it's pretty decent. So
yeah. Okay. 1, 2, and 3. Perfect. Thank you so much.
Thank you. Before you go, everybody, we have a few links in the chat. So another thing you need to help us with, these sessions are absolutely free. We put a lot of time into organizing this. We have our amazing speakers. Michelle, I can let you go, and Caroline, thank you. This is for our participants. Oh, actually, no, Michelle, we have a speaker evaluation form to send you. It will send you about 5 minutes. So just 5 more minutes of your time, please, because this is a funded project. We need to sort of show the impact we are having, particularly as it's free. So please give us 5 minutes of your time. Participants, the form is in the chat, in the general chat. Michelle, you will get yours in your DM, or if you need to run, we can email it to you. But please do it now, because then we won't be looking for you after. But please do fill out those forms. I will just wait online with anyone. We have 5 minutes to the end, so we've left the 5 minutes for you to finish the form. Please don't forget to go to AfriConEU website for more details on our upcoming webinars. I think next month we're holding another one on crowdfunding and microcredit. So if that sounds of interest, please do register. So I'll just sit down, and anyone, when you complete your form, please just type done in the chat, and I will thank you and see you off. I've been thinking maybe I should get like some music to be playing, the feedback form, hype music, something to keep people motivated as they help us fill this form. I know it's not the most fun thing to do, but it really, really, really does have an impact for us, and it really helps us keep this project going. So thank you all for your participation and your attendance, and thank you in advance for your feedback form. So yeah, anyone who completes, feel free to leave, and please just type done in the message so I can thank you.
Michelle, yours is in your WhatsApp, so you could also find that.
Yeah, filling it in.
And Michelle has kindly shared her email there. So for the startups in the group, shine your eye, as they say in Nigeria.
Mm. Hope I didn't confuse anyone. I think that the easiest way to explain funny concepts is that. So
Oh, thank you so much. Thank you so much, Heracles. Have a good the rest of the day. Thanks for filling the form.
Thank you. Have a nice day. Bye.
Thanks.
Yes, I have.
Oh, thank you. Thanks so much. Samson, are you still working on it?
Yes, I am.
Okay, thanks. Thanks a lot.
I think everyone is gone now.
Yeah.